Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Wednesday, March 13th, 2019. Sorry, I didn't get a charts of the day out today. I had an appointment and some things I had to do this morning and ran a lot longer than I thought. But coming back in, looking at the markets, a bit surprised. I figured at best we'd have a consolidation day today, again at best, but so far they're up. So I want to do an update right now. And we're going to start here with the weekly charts because, again, that's where my focus has turned largely to the weekly charts since last week. So as I'm doing this video, we're coming up on the halfway mark. Sometime I guess around lunchtime here today will be halfway through the week. So remember, these are weekly candles. The only thing that matters when you're trading off weekly candlestick, looking for signals off the weekly charts, are weekly closes. You don't take breakdowns intra-week if you're looking at a weekly trend line as your sell signal or buy signal. And as far as candlesticks like those bearish engulfing candles, you need to see them confirmed, and right now they're not. The only thing I'll say is that the week, like I said, we're halfway through. Lots happened in the first couple days of this week, and a lot could happen in the next 2 days. But as of now, let's just see where the charts are and what levels to watch. So here's the S&P 500 tracking ETF SPY, and right now you can see we're challenging that candle, and that's also, we'll get to in a minute. Remember, that's a very significant resistance on the daily time frame as well. So certainly at this point, I'm not going to give check marks until anything's completed, but if you want to give it to this point in the week, by far, you give that to the bulls. I'm surprised at the resiliency of the rally in spite of those big bearish engulfing candles. It's just telling us something that right now there's still a strong bid for stocks at this point in time. So if they fade that, like I said, they may come for your stops. I talked about that last week, or was it earlier this week? Either way, using that example. So that could be what this is, but right now I'm seeing some pretty broad participation. Most sectors up today. Actually, they're all up right now. And I got back a minute ago. I think one was red, but all right. So there's SPY, and again, let's just watch to see how the week closes. I'll get to the trade ideas, at least some of the trade ideas that are related to the markets here in a second. But I want to go over the broad markets on this weekly time frame. So QQQ. And again, QQQ is not, it's the least diversified index that of all the major indexes I follow, but it's something worth noting. Now, another thing worth noting is last week on Monday, remember we first had bearish engulfings on the daily time frame. Then we finished the week with bearish engulfings on the weekly, these big red candles. QQQ was the only one out of all the indexes I follow, the Dow, the small caps, large caps, mid caps, the S&P 500, QQQ didn't print those daily candles. So the story lately has been that the FANG stocks, Microsoft, Apple, Alphabet, Amazon, all those, Facebook, they were the ones and have been the ones leading the market up, leading QQQ up recently. So tech's done a lot of this heavy lifting. But again, I just wanted to point that out, that let's see what the market does, meaning the Dow, the S&P 500, the mid caps, small caps, and as well as QQQ. We'll see how the week finishes. But right now, like I said, this has been a pretty resilient buy up. We're halfway into the week, so I'm not gonna extract much from what's going on up to this point. But I will say, if you have to at this point in time, if you have to, place a bet on a team right now, it's looking pretty good for the bulls this week, because if they can, especially if they can build on this through Friday, they've just wiped out some pretty darn high probability potential candles. Remember, I said we had to get some downside follow through, and so far we don't have that. The bearish engulfing in itself, you can take a shot on it for a short trade, but it's not confirmed until you have the additional downside. And so far this week we don't, but again, we're halfway there. So let's see. All right, that's SPY covered. Let's look at Dow. Yeah, Boeing was a big part of this, but again, it is what it is. It's part of the index, it's part of the markets, and so far, excuse me, so far the DIA, the Dow tracking ETF, is only retraced about half of that. It's only up to about half of the candle there. So this one certainly has potential. I mean, they all have potential, but if the Dow turns around and dumps later this week, as I said, ideally, and again, I'm going over several different indexes because that's the market. The stock market is simply a sum of its parts. So we really need to look at all the parts if we're trying to do a thorough analysis. So ideally, you do want to see all the indexes close at or below the midpoint, and again, more importantly, or more ideally for confirmation, red candles. If they close at the midpoint and they're green candles, that's still not confirming those bearish engulfings. So you need to see a heck of a reversal, close somewhere at the top of that candle here. Remember, no matter what, you're going to have a wick right now, even if we reversed. These are the wicks, the candlestick shadows up top, the skinny part. So that will exist no matter what. It's just how does this candle look at the end of the week. So we'll just have to wait and see. All right, mid caps, MDY, mid caps and the small caps have both. You can see from longer term, they're still in bear markets by far. They're not even close to those highs. They dropped well over 20%. So at this point, it still appears to be a bear market rally in the mid and small caps, and they're only about halfway up on those candles last week. A little bit more than half maybe right now, but again showing relative weakness, considerable relative weakness to the large caps at this point in time. So will they play a game of catch up? Yet to be seen. Trend indicators remain clearly bearish, at least on this weekly time frame. So that pretty much covers the broad markets and what I'm watching for this week. Daily charts. Let's just jump over to there and let's just look at the SPY. I got to keep this video somewhat short to get everything in. At least cover the broad markets relatively quickly here. So there's SPY. We have that very significant resistance level marked by a lot of reactions here, and then these three big reactions. Remember, we popped it. We hit it a couple times last week, reversed, popped above it intraday with a big reversal candle, and now we're trying at it one more time there. Another pop above there. But again, how you close the day, if the bulls can put this thing clearly in the rearview mirror, right now they certainly have the upside momentum to try to break through there, and they finally had a correction that helps to alleviate the near-term overbought conditions, the excessive bullishness. So everything is there if this market wants to put that level clearly in the rearview mirror. The big question is, will it? So that's yet to be seen. We'll have to see how today goes, and really how I think how the rest of the week goes again. 60-minute charts. Somebody asked in the trading room last night if the divergences on the 60-minute charts, the QQQ, were gone. They're not. They could be soon. We're certainly, you can see how the PPO is pointing up. So the story of that, we had divergence at that recent high, and that divergence did play out. It was the biggest correction in since last year, since the meltdown in the fourth quarter. If the article wasn't mistaken, I read that we haven't seen all the indexes, all the major stock indexes, drop 5 days in a row since it was 2016. Again, I read that. I believe it was a journal. I don't know if it was a misprint, if they were referring, but either way. So you had one of the biggest corrections. At least again, that 5-day thing. Read too much into that. And again, they look at statistics. You can play with the numbers, so they're looking at every index. But it was worth mentioning that those divergences did play out. Now, we're seeing a pretty aggressive buying so far at what was again, my earliest support levels, pullback targets, even shy of the targets, just resistance or support levels. I was expecting a reaction, and let's see if that's followed up. Let's see. I did some videos the other day, covered a video where we looked at some big volume in SQQQ so far. It means a lot of people had piled into that and then we're piling back out, getting squeezed out. So let's see if it's a short squeeze, but I can tell you we'll have to see how the week finishes, but right now you can see the momentum is to the upside. So although we did have confirmed divergence here at this point, and it did play out for a correction, we only have potential divergence now, and we don't have a lot of room. Again, when you're looking at the S&P 500 at pretty important resistance, you're looking at these divergences being burned out or negated. If we go up much more, that means we would have taken out the previous highs, at which point you no longer have negative divergence. So Yeah, the Bears are going to have to pull a stick save here soon, if not today, by the end of the week. And I'll say this: sometimes you see these patterns foiled. You see a pop. The market loves to fool the masses, so anything's possible. We'll keep an eye on any reversals. If we do get a breakout on that daily time frame on SPY, if we close above it this week, then you look for a move back down below it, especially an impulsive move, and that would indicate a bull trap. But we're still, let's see if we even close above there and how we close the week today. SPY, same story. The divergences on SPY, you can see here's the divergence line right here. Again, we did have divergence at the most recent high right here, and that led to that correction right down to that 273.23 support level. And I'll tell you, they stepped in, and I certainly expected a reaction there, but I can say the reaction's been strong. SPY has wiped out nearly all that give back so far. That's aggressive dip buying, and if they don't fade that soon, it just shows the character of this market. So they also have to fade it soon, or else we're going to have these divergences burned out there on the 60-minute chart. Okay, so let's talk trade ideas real quick. There's not enough in the charts at this point in time for me to modify my trading plan on this QQQ trade. So there's the stop, 178.70. We hit S1, we reversed, because I figured we'd get a bounce off S1, we got a bounce and then some. As I've just mentioned, this is just a different board on the 60-minute charts. The divergences is still, the divergences are still hanging on by a thread. At this point in time, we can speculate on a failed breakout or anything else. I don't see enough to modify my trading plan in either direction. What I mean by that is sometimes I'll modify or extend a stop. Sometimes I will lower a stop or close a trade out early. I don't see the reason right now to do any. I'm just sitting tight this week. If they clip it, they come in and get that stop, and then we do get a big reversal the following week or whatever, and it shows that any breakout above this level and above that level I just showed you, the important resistance on SPY, we get some kind of solid reversal and looks like a bear trap or a bull trap was sprung, then we can always jump back in. So for now, the stops stand. That trade's still active. Reverse shy of T1, and it's just shy of the stop right now. The TVIX trade, of course, it's a long, but it's really a play on the market going down, and we hit our first target quickly, which provided a nice place to book partial full profits, and I also then moved the stop up at that point because what happened and what's happened in the market really doesn't fit the narrative good of what should have happened. So we stopped. I forget where the entry was, but we either, I don't know if I did it at break even or for a small loss, that I can't recall. It might have been a small loss, again, for those that didn't book any profits there, or that recycled back in somewhere else. If you recycle back in, then of course you should have a different stop level. Like, for example, if you bought right here and you're shooting for one of these targets, you could certainly have a wider stop. But so that one stopped out, and I'll move that when I get a chance to update the trades. I'll move that to completed trade category, and we'll keep an eye on it. Again, if the markets somehow reverse this week and give us some pretty solid bearish weekly closes or something that says we may get some downside next week, we can certainly add this one back again. So you can see like the markets, it continues to diverge right now as it goes on to make almost an equal low. But I don't put too heavy a weighting on this. Really, let's focus more on the index charts. That's what I like to focus on when I'm trading the volatility indexes. And then on that, we have one sector short right now. No, it's not it. It's SOXX. I did an extra one there. Here we go. This one is well above the stop. You have to give this one room. And so far, I'm trying to recall, I think we're probably just slightly underwater. We entered somewhere right about here on the breakdown and took out this first support level, went down, came really close to the first target there. You can see that first target was at 174.49. We came down to within a point or so of that on $175 security. That's pretty close, but no cigar. And right now we're kind of in no man's land. You know, our stop is way up here. The semis are still above their highs back from a couple weeks ago. And same story on this one. I don't see any reason to modify the trade at this time. Of course, these are just suggested targets, suggested stops, and things like that. So use your own. If you don't want to allow for, try to give you an idea. If you get from here, that's about another 4.37%. I think we have a beta adjustment on this trade too, so it would be less in actual dollar terms. But then the downside targets, if these are hit, and if they are, let me tell you this: if this trade doesn't get stopped out, and the index shorts don't get stopped out, if we see some kind of reversal coming up here in the next few days, or even a pop, maybe the index shorts get popped, and then the markets reverse and put in that bull trap scenario, I will most likely be extending these targets. We'll just have to see how things look, but to see a sharp reversal of what just happened this week, I think that'd be quite bearish. But right now, at this point in time, at this point up to the week, the check marks certainly go to the bulls. Okay, on to commodities, and then I'll try to touch on gold and treasuries if we have time, and we'll wrap it up. Just a few commodities. I'm not going to do an extent, so just the ones we've been watching lately. Coffee. This is the only one that's in active trade now. And remember, I'm covering the 60-minute chart, but I laid out in the original post for this trade, coffee is at very significant long-term support. It has long-term support around the $1 area, going back for many years, and so it is also a bottoming play. That's why I added it on as a long-term trade, because either it's going to play out, we get this one will start to take off. It may base for a while. That's the thing. When you're in a commodity, especially if it's fallen to a long-term support level, it could. But as I went through, and again, it's all in the previous notes. If you're not, if you're just catching up to that, go to the trade ideas, and then pull the post there. Click on the, on JO or KC. I think it's just might be under JO, and you'll see the previous notes on that trade. But again, what I was getting at is coffee typically doesn't spend a lot of time basing. It's a trendy little sucker. What I mean by that, well, you're either, it's like a shark. It's, it's moving. It's not sitting still. It's either going up or down for the most part. This was up, but it was, somewhat of consolidation down. So this is about as idle as it's been in a while. And again, because it's fallen to long-term support. Last time it touched that long-term support, it took off. And so you can see right now, this lower line, that's basically where it fell to at that point. It undercut that $1 level, $1-ish, we'll call it. It's trade around it. And that's it. So we still have, I'll point out the most salient features on this chart. The divergences that were in place back when we took it are still in place. In fact, they're even larger. They continue to build. So they're intact right now on the 60-minute chart. And this is what I'm watching right now. We have a little minor downtrend line. So we need to pop above there. And of course, we still need to take out that previous reaction high. And I think this is a big level. I believe I mentioned that, 101.74. If that gets taken out, that I strongly believe that would open the door for a move up here to at least the 107 level. That'd be a pretty decent lift. And again, maybe a lot more. When coffee wants to run, it can run. And that cuts both ways. So, let's just look at the official trade on that. So there it is. So far a dead money trade, but we're still well above the stop right there. Stops on a daily close below 33.60. Targets are way up here. Plenty of upside. And we'll just have to update that one once something happens. Okay, speaking of things happening, I'm still watching this one. I saw it when I was out earlier that cotton futures had taken out that, remember I've been focused on 75, pretty decent resistance level, nothing super solid, but you can see some reactions there, one there close to it, and a couple there. It's popped through, not a lot of follow through right now, so I'm holding off. It's on watch. It took out the downtrend line. I wish I had more reactions. If I did have more reactions, I should say it this way. If I had more reactions, I'd have more confidence in that trend line. So here's what I'm watching. And the overall theme, too, is a lot of these commodities really appear to be setting up for nice bottoms. They've also looked like that for a while, and they've had some of them have had their little fits and starts where they take off, and but they've come back down. So the commodity arena right now, and a lot has to probably do with the U.S. dollar. They're setting up, and they're setting up for both swing trades and quite likely very long-term trades. But we're not seeing that overall broad-based participation. Now, let me clarify that. All commodities by far are not created equal. Oil, natural gas has nothing to do with cotton and coffee. Very little, I should say. But the ag commodities do. They tend to, a lot of those tend to move together. And so we're watching things like wheat, coffee, even cotton here. We're going to keep an eye on those as potential swing trades. So there it is. In other words, I don't want to jump the gun because, yeah, it's broken out. But we saw coffee break out a couple weeks ago and no follow through. So I'm being a little extra selective on these, just like I'm being extra selective on equities in the stock market. I just do not like, where we're at. Same thing I said weeks ago, and we're really where we're at weeks ago. Despite this rally today in the market and so far this week, the stock market has gone absolutely nowhere for weeks. So, it's not like it's not going down, but it's not going up either, at least as of recently in recent weeks. And same story with commodities is they seem to be really compressed. They're not going down much anymore. They seem to be bottoming. But once the momentum hits, I'll be a little less cautious, if you will. I've shared cotton and some others as potential trade ideas. I'm showing you that here's the charts. I'm getting the charts out to you, ideally with some price targets, just in case everything starts to move suddenly. We can jump in, and that's one of them. So I'll watch this, and who knows? Maybe by the time this video is published, I'll add cotton if I see something I like. But I'm most likely going to hold off at least at this point in time. And here's another one. I believe it was just yesterday I posted this. Wheat looking interesting too. Nice, look at that nice clean channel. Nice falling price channel. Divergences at the low. Check, check, check. Down on all the indicators. Breakout. Pulsa breakout yesterday. Check right into resistance. And again, nothing goes straight up forever. That was a big move off the bottom, and now it's pulled back to, you got it, dual support levels, not just one but two. Let me grab my tool here, and that is the back test of the downtrend line as well as this 443.10 level. So that one's actually from an objectivity point of view, it doesn't get any more objective than that. A breakout, with a back test. So far, successful back test. So I may add this one. I'm going to look at the charts again. Like I said, I'm just still catching up on everything. I want to get this video out to you guys. Again, I think these levels were shared. I had to replicate this chart right now before I started the video. I went there. All the trend lines were gone. Sometimes they just disappear on this. What is this, investing.com platform? And there's some potential targets. I might have one around this level as well. So if you didn't check it out, I put up some long-term charts on wheat and the same 60-minute chart on wheat futures yesterday. Okay, crude's still looking interesting. Crude, a lot like the stock market. If you've been shorting crude lately, there's been these tactical opportunities here. I point a lot of these out. It's that resistance, back testing, things like that. But the bigger picture has been like the stock market. It's gone nowhere. So if you've been trying to swing trade crude, and this is why right now we don't have DWT as a trade idea, that you get eaten up in the decay on the back and forth. But look at that. Where does that start? Here's a trading range that comes down all the way back here to mid-February right there. Here's the time. So right around February 15th or so, we entered this zone, and it has just been a very tight, go nowhere sideways range. I mean, plenty of trading ops within there, to the top and the bottom of the zone, and that's where we're at. So we're at the top of the zone, which again, I've covered in other videos, is also longer term resistance on crude. And that's it. Oh, and we're back testing the trend line off the lows as well, or just below it. And so far today, crude tried to pop that level. See, it tried to pop the recent highs as I zoom in here on that candle. And so far there's a red, there it is, if I go real close, red candle. It's still right on the top of the level for all intents and purposes, give or take. So look at it this way. It's another shorting op objective. If with a stop not too far above, it's either going to break out of this range, make an impulsive breakout, maybe take out this trend line that it's been backtesting, or I'll watch, rinse, repeat scenario. So all I can tell you, it's objective again to short it. If with a swing down to here or any of the levels, you can see I have other minor support levels that have also acted as support and resistance in the last month or so. And finally, gold. Gold has rallied. It had a divergent low here. I was highlighting maybe the potential for a bigger one, but we did have divergence at this point, which so far has contained the pullback. So let me move these lines here, a little divergent low, and we've been moving up. At this point in time, it is at resistance. But remember, I still remain longer term bullish on gold. I'm starting to see the euro, the euro setting up. It hasn't broken out, the euro against the dollar. That's what we really need to watch. So either way, there's some resistance here on gold. But, when I look at the daily chart, and if you guys recall recently, it was correcting. We had a divergent high, everything. The reasons I got out here and then warned of this divergent high and then the breakdown, and that triggered the correction. And at that point, when we started to fall down here, actually we were coming right up on 122.40, if I remember right, about a week or two ago. Said this would be a good scale in zone. I said worst case, if it got here, that would be a very good buy point, but not to scale down below there, but down between 122.40 to 120. And so far we hit pretty much the middle of that range, and gold's been going up. And gold's been going up despite the stock market going up. So I'm seeing a little bit of a flight to safety bids. Treasuries were lifting recently. I'm looking at the PPO still, again, the signal line, the 9 EMA, still in bullish territory as it has been right here. It crossed above that zero line. And as I often say, that zero line tends to act as support and resistance when tested from above and below. So there's another check mark on the daily. If gold can continue, if it can, PPO can turn up here and successfully defend that zero line and rally, then we could get the next leg up in gold soon, or maybe it already started. Either way, I don't have enough evidence to say that with confidence yet. So kind of just doing updates on this. Like I said, long-term traders shouldn't be overly concerned with the zigs and zags. Strategically, or tactically, trying to get an entry here for a swing trade or maybe the next long-term trade, I just need to see a little bit more. So that's that. Let's wrap it up here, and let's see what the markets do today and into this week. Remember, anything is possible. And we still, as I said, as I'm wrapping this up, we're halfway through, not even halfway through the trading week. So, all right, I'll do another update today if anything significant happens at the end of the day. If not, we'll just follow up tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.